and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There is a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There is a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges ALBA graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from ALBA graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges ALBA graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There is a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe.
Okay, once everybody's taken their seats, we'll get started. Thank you very much. So, good evening, Excellencies, distinguished speakers, ladies and gentlemen. Welcome to this Economist Impact Gala dinner with a focus on the outlook for the global economy and financial services in particular. This event is being held under the auspices of the British Embassy in Athens, thank you, and in partnership with the British Hellenic Chamber of Commerce. Thank you very much. It's really great to see so many of you in the room this evening. My name is Joan Hoey. I'm the Senior Analyst for Greece at the Economist Intelligence Unit and the editor of The Economist's annual Democracy Index, and I'm your moderator this evening. The failure earlier this year of several US banks and of Credit Suisse in Europe has raised fears of another financial crisis of the type we saw more than a decade ago. And this evening we will consider whether these fears are justified or not. We're honored to have 6 distinguished speakers to share their insights about the state of the world economy and where we're heading over the coming year. First, I'm going to give a very brief presentation of the Economist's forecast for the global economy, for Europe, and for Greece. So I've got a PowerPoint presentation, a few slides, which I'm going to go through very quickly. And I'm going to start with the war in Ukraine. I think it's clear to everybody now that geopolitics have become a major driver of trends in the global economy. So we need to start with our assumptions about the war in Ukraine. Now, at the moment, all eyes are focused on Ukraine's counteroffensive, long-awaited counteroffensive, which is now got underway. And many people hope that that will lead to a decisive shift in the war, an eventual ceasefire, and a settlement of this already long-running conflict. However, our assumption since the very first days of the war is that this would be a long war, with both sides seeing this conflict as existential, but neither being able to impose a decisive defeat on the other. And that, alas, remains our view now. And I think we all need to really think through the consequences of that for the global economy. One consequence, I think, is already becoming quite clear, and that's that the world is beginning to divide into blocks. And that shift was already evident before the Russian invasion. The war has simply accelerated some already existing trends. So we're seeing a bifurcation taking place. Still has a long way to go, but it's certainly the case that that has speeded up over the past year or two. Russia has now been essentially excluded from commerce with the developed world. Sanctions are here to stay for a very long time, and what we will see is growing dependency of Russia on China. We also see that Russia and China are investing very heavily diplomatically in wooing the developing world, most of which is staying neutral in this conflict. And so what we're seeing is both what I would say is a north-south divide between the developed and developing world to some degree, as well as an east-west divide in terms of the shift of global economic power to the east as well. Now, the fallout from the war has been greatest in Europe, which has been in the front line of the conflict. And it's had major impacts both on supply, in terms of supply of energy, raw materials, and food, and also on demand. So we've had a trade shock, we've had a confidence shock over the past year or so. The impact has also been uneven across Europe. We've seen that Germany has been hit hardest, and that's because the German industrial model really was so highly dependent on supply of energy from Russia. And obviously when Germany catches a cold, Eastern Europe also tends to do quite badly as well. So that part of the region has found it much more difficult to cope with the fallout from the war in Ukraine. But at the same time, I think it's not all bad news. The adjustment that is taking place in Europe has happened probably much faster than many people expected. So we're seeing new LNG terminals coming online, new energy suppliers in Europe, and the shift away from Russia, which has been very, very painful, but maybe not as painful as some people expected. However, the war is presenting a challenge for Europe's competitiveness, and as I say, especially for Germany's industrial model. The good news is that the Eurozone avoided a recession in the winter of 2022 to 23, owing really to low energy demand amid quite warm temperatures over the winter. But what's happening this year for sure is that high inflation and high interest rates are really weighing on spending, and that means that the Eurozone is going to record pretty anemic growth this year. Our forecast is for growth in the Eurozone of 0.8% real GDP growth on average. In terms of the global implications of the war, I think they've all become quite familiar to people in this room over the past year. We're still feeling the effects of very high commodities prices, spiking global inflation, and monetary policy tightening. And that's all having an impact on growth. We're not forecasting a recession. There will be a recession in some countries in 2023, but overall, we're not forecasting a recession in Europe, and nor are we forecasting a global recession. But nevertheless, it's going to be quite a tough year. Central bankers have been hiking rates very aggressively to try to tame inflation. We expect an end to that tightening from the middle of the year. In terms of the impact on growth, as I say, we expect growth to remain subdued in 2023 at 2.1% globally on average. The one place which is booming at the moment is China. After the end of the zero COVID policies of the past few years, we're forecasting growth of 6.1% in China this year. So we've got a consumer-led recovery going on, a lot of pent-up demand for services being released in China. So as I say, we assess the risk of a recession as low, but it really is going to be a tale of two halves. So very more difficult first half of 2023, and then a pickup in growth, a rebound in the second half of the year. There are risks, however, and I think we'll be hearing about those later from our speakers. There are risks of bank defaults. There's risks from a possible escalation of the war in Ukraine, from sovereign debt pile-ups and problems. So this is going to pose lots of challenges over the coming year and into 2024. If we want to take a look at how growth looks like globally, what you see here on this chart, the purple colors, which I think the only purple one there is probably Russia. We're talking, the purple color is negative growth. Blue colors, blue-green colors are fairly anemic growth, and orange and red is where the more robust growth rates are going to occur. And so you can see that's mainly there in the east. The big question, which I hope our speakers are going to answer later, is when is global inflation going to recede and will prices begin to drop? Our view is that that's not going to happen for a long time. Inflation averaged 9.2% in 2022. It's only going to slow, in our view, to about 7% in 2023, and it's going to remain much higher in some places in Europe. And even if inflation begins to really decelerate in the second half of the year, prices are going to remain at high levels. They're not going to return to pre-war or pre-pandemic levels for a very long time. I want to finish just to say a few things about Greece, because actually, in comparison with its peers in the region, Greece is performing very well. Now we're heading into a second election at the end of this week. Our assumption for some time has been that we will see the return of a majority government, new democracy government, with a comfortable majority in parliament, and therefore a continuation of the reform agenda that we've seen in recent years, which has restored investor confidence in Greece. First quarter growth in Greece, quarter on quarter, it was actually minus 0.1%. Year on year, it was 2.1%. But if you look below the headline numbers of what was going on, it actually paints a much more positive picture, because all the pressure on the headline rate was entirely due to a sharp fall in inventories that shaved 3.8 percentage points off the headline growth rate. But if you look at private consumption, it was positive. It was 1.4%. That's despite inflation, despite high interest rates. We also saw government consumption of around 2%, 2.1%, and we saw exports of goods and services performing very strongly, 5.7%. We expect gross fixed investment, which was negative quarter on quarter in Q1, to rebound. We expect a very strong tourism year again in Greece, and we expect a very positive impact from absorption of EU funds. So in our view, Greece will continue to outperform its peers in Europe in terms of growth, and also in terms of the pace of the reduction in inflation. So ending on a positive note on Greece, I would like now to invite to the stage our first speaker, Anna Kalyani, who is the president of the British Hellenic Chamber of Commerce. Welcome.
Your Excellency, dear distinguished guests, ladies and gentlemen, good evening. I'm delighted to welcome you here on behalf of the British Hellenic Chamber of Commerce in today's event. First of all, I would like to congratulate Nektaria Passarivakis, who represents the Economist Impact Events in Greece, for this excellent, as always, organization. We are looking forward to continue our good collaboration in organizing other events in Athens and in London. I would like also to thank the British Ambassador and the Matthew Lodge and the British Embassy in Athens for the close collaboration. The timing for such highly topical subject could not be better. Recent financial turbulence is reflecting uncertainty about the underlying health of the banking system. The various recent events are a mixture of the overall politico-economic situation, broader themes, but also individual and corporate mistakes. The rise of market interest rates by Fed, the ECB and the Bank of England tightening has consequences in banks depending on the specifics on each market. In Europe, we do recognize the speed of reaction and legislative measures taken by the ECB. At the same time, many parameters have been changing rapidly the last decade. The disruptions due to the technology, the speed of access to information, the role and the future trends of digital currencies, cryptos, fintech, but also the concentration of power in the big technology companies, the sophistication of the financial tools, the role of AI and blockchain technology. We're skeptical on how all these factors will interact. The business community and the citizens need more analysis and more transparent information, timely, in order to evaluate and minimize their risks by the policymakers, by the providers of financial information, by the media. The question also is at what extent the central banks cross-border exchange information indicatively in the EU and the US. As the networks that comprise the financial world become more sophisticated, how we can take these factors into consideration in the financial models to make decisions? Do financial models and the way new technologies have been developed lead to increased volatility and encourage turmoil under certain events? Regulators should use more forensic techniques to timely respond to all this. Within this environment, it is crucial to apply ESG metrics using a strategic approach. Allow me to say, and I will emphasize, that ESG without ethics has no value at all. Additional safety nets have to be put to improve ethics in the financial industry and decrease corruption. Towards this direction, the financial community needs a new approach to attract and retain the appropriate people. Before I close, I would like to thank H.M. Chris Barton, the Trade Commissioner for Europe, for his presence here tonight. I convey the Chamber's strong commitment in further strengthening the already strong bilateral business ties between UK and Greece. There are significant opportunities in many sectors. We have to continue the discussion on the improvement of the trade relations and to minimize the obstacles in the post-Brexit era, while also tackling common issues such as immigration, labor shortage, issues in supply chains, education, and not only. And with this note, I will close my opening remarks. I'm sure that today's discussion will be insightful. Enjoy the evening. Thank you.
Thank you very much. Thank you very much, Anna. And now I'd like to welcome to the stage Matthew Lodge, Ambassador of the United Kingdom of Great Britain and Northern Ireland to Greece.
Thank you, Joan. Thank you, Anna. Ladies and gentlemen, distinguished guests, it's a great pleasure to be with you here this evening, and I'm delighted to be able to stand at the beginning of this dinner on global economy and financial services, and also to reflect on the strapline, managing through the current turmoil. That's not for once, I'm glad to say, about domestic politics, and Greece is giving us an example of clear direction in that regard, but turmoil indeed, that of course you know as well as I do, is impacting very dramatically on the global economy, as Joan set out. Before I say a few words, let me please also thank our collaborators this evening, Joan Hoey herself, but also Nectaria Pasarevaki and all of the Economist team, Anna Kalyani and Kenny Evangelou from the British Hellenic Chamber, the team here at the Grand Hyatt, Governor Yanis Stonaras, Lord Jim O'Neill, and Eleni Vretou, and Chris Barton, His Majesty's Trade Commissioner for Europe, all of whom you'll be hearing from a little bit later on. Ladies and gentlemen, you don't need an ambassador or diplomat to stand in front of you to point out the obvious impact of Russia's invasion of Ukraine for the British and Greek people, but also much more widely. We've seen a huge increase in energy and food prices, placing serious burdens on families, leading to unprecedented government support schemes. And of course, this supply-side shock, caused by the most serious war on the European continent since 1945, comes on top of the supply disruptions in economic activity that were the aftermath of the most serious pandemic in a generation, if not in a century. One does not have to be an economist or a financial expert to see the impact of those shocks. In the United Kingdom, the government is determined to bring down inflation from levels that are much too high. And I take some confidence and encouragement from Joan's remarks about that perhaps happening later on this summer. We know that higher interest rates make things hard for many people. But striking the right balance between inflation, monetary policy, and financial stability is an inherently difficult job, a topic that I am sure our distinguished speakers will expand upon. And of course, sanctions, something again that we heard about from Joan, has almost become a permanent feature as a tool of foreign policy, playing an increasingly prominent role since Russia's invasion of Ukraine. But as we also know, and I've talked about to many of you in the shipping and financial community, the economic effects and political effects of those sanctions can be slower than policymakers may choose, whilst the disruption to global supply chains is often much more rapid and potentially more enduring. All of this, whilst the global economic and trade order is showing signs of increasing fragmentation. More countries are tending towards protectionism, and the primacy of the Bretton Woods institutions is being eroded. I was in London last week for our annual gathering of ambassadors, and we were privileged to hear from Mia Mottley, the Prime Minister of Barbados, enthusiastically pushing the Bridgetown agenda and arguing for urgent reform of the international financial institutions. So this is a global conversation, and these are global impacts, even if for many the war in Ukraine may feel a continent away. In the decades ahead, it is likely that the world will have moved further towards multipolarity, with the geographical and economic center of gravity moving eastwards towards the Indo-Pacific. One reason why my government is talking of its Indo-Pacific tilt since we have left the European Union. An increasing great power competition may be unlikely to mean a return to Cold War-style blocs, but instead the influence of middle ground powers is likely to grow further, particularly when they act together. So, we clearly must make progress internationally in this increasingly volatile world. We need to cooperate with allies, new and old, against those that are driving instability. And to this point, whilst the United Kingdom may no longer be a member of the European Union, that does not, of course, mean that we have somehow turned our back on Europe. Through geography and much more besides, we remain European, and our ambition is to build modern, strong relationships with our European partners and allies based on our common values, reciprocity, and cooperation across shared interests, just as we have done in response to Ukraine. And finally, a word about the United Kingdom and Greece specifically. In October 2021, shortly after I arrived, we signed a strategic bilateral framework agreement, a clear example of our mutual determination to invest in the sort of patient, long-term diplomacy that we believe is necessary. This strategic bilateral framework enables closer cooperation across a wide range of sectors, not just foreign policy and defense and trade and investment, but health, education, culture, tourism, and maritime affairs. And a little bit of publicity, I was delighted to hear from Minister Kikilias, the tourism minister, that in 2022, the inbound number of British tourists exceeded those coming from Germany for the first time in a decade or so. So British tourists are playing their part in the resurgence of the Greek tourist economy. But these interests bind our two nations together, along with our commitment to democracy and freedom, our shared responsibility as allies and partners in NATO, and as maritime nations with a global outlook and a belief in free trade and strong, open global economy. These shared values and interests are the ones that we must preserve and advance, even if, especially if, today the world is in turmoil. So thank you very much for joining us. I am sure you will have an inspiring and enlightening evening, and I'm very pleased that we have been able to work with Nectaria and the Economist team to make this evening happen. Thank you very much.
Okay, ladies and gentlemen, now we're going to have our first panel discussion. We have three speakers. who I'd like to invite to join me now on the stage. First of all, we have Yanis Dounaras, the Governor of the Bank of Greece. Welcome, Governor. Jim O'Neill, former Chairman, Goldman Sachs Asset Management, creator of the acronym BRICS. Don't think anybody will let you forget that ever. Also former UK Commerce Secretary to the Treasury. Welcome, Governor. Welcome. Please take a seat. Stamped on your head. And finally, Eleni Vretou, Chief Executive Officer, Attica Bank. Welcome. Please take a seat. So the way this will work is each of our speakers are going to take a bit of time, 7 to 8 minutes, to set out some of their views, and then we're going to have a conversation. Then I think we're going to have our first course of the dinner, and then we'll resume with another conversation afterwards. So let me invite all of you. You're welcome to sit where you are, or you're welcome to use the podium, whichever. So, Governor, it's over to you, first of all.
Thank you. Good evening. It's a great pleasure to be with you today. An honor and a pleasure, and a great pleasure to be in the same panel with Lord O'Neill and Eleni Vretou. I will try in the 8 minutes that you are giving me to cover very briefly the 4 questions you have asked. The first question is, how possible is a new banking crisis? Well, there are still weaknesses, mainly in some parts of the US financial sector. However, we are not close to a 2007-2008 banking crisis. Interest rate increases, necessary for monetary policy normalization, have revealed basic weaknesses in the business model and gaps in the supervision of US banks. Among others, inadequate management of interest rate risks, uncovered deposits were a large part of the deposit base, there was a high concentration of funding sources, there was no chief risk officer in Silicon Valley Bank during the crisis. And of course, there was a serious relaxation of supervision for certain American banks since 2018. The Credit Suisse case was rather idiosyncratic. There was a bank with investment banking problems and losses. Problems, however, now have been tackled and confidence almost being restored. There was swift action by US and Swiss authorities. There was deposit coverage in the US, absorption of Credit Suisse by UBS. However, the decision to write off Credit Suisse AT1 bonds before CET1 capital created certain bond market problems, but now they have been to some extent eliminated. However, in the Eurozone and the EU, we apply a supervisory model based on the lessons of the 2007-2008 crisis. We have much higher capital and liquidity ratios, better asset quality, that is less NPLs, non-performing loans, effective risk management, good governance, internal control systems. As a result, in December 2022, in Europe, we had a capital adequacy ratio of 19.4%, an NPL ratio of 1.8%, and an LCR, a liquidity coverage ratio of 165%. Those American banks that failed couldn't pass, especially the LCR test in Europe. What have been the lessons from the recent banking crisis, however? First of all, risks have increased. We do not really know the shape or the form of the next crisis. Interest rate normalization, quantitative tightening, inflation, and recessionary risks make a difficult combination. I think you have mentioned it before in your introduction. Risks of a bank collapse not completely eliminated, hence we have continuous supervisory monitoring. Weaknesses in even small banks may create systemic problems. The role of social media. Unfortunately, they distorted information. The possibility of a bank run due to misinformation has increased. In combination with new technologies, social media might create panic. in Silicon Valley Bank, 33% of deposit actually flew online in in a single day. The Financial Times called it Twitter-fueled bank run. Actually, the role of CDS markets, along with social media misinformation, was rather strange. We had evidence of efforts to create bank run in other EU banks during the Credit Suisse incidents. Fortunately, these efforts failed. The SSM creation has eliminated the national bias in supervision. That was an obvious improvement in Europe. Now, large and small banks, that is, systemic institutions and less systemic institutions, are alike in the eyes of the supervisors. The separation principle, however, that is, the separation between monetary policy instruments and macroprudential instruments, is valid under normal circumstances. During crisis, however, financial stability risks ought to be taken into account when monetary policy decisions are being taken. It is vital, and this is my conclusion for the first question, it is vital for the European Union to agree on the crisis management deposit insurance measures prepared currently by the European Commission. Lack of a complete banking union and a complete capital markets union feeds fragmentation and prevents, among others, the smooth transmission of monetary policy. I move quickly to the second question, which is, how long can high inflation and high interest rates last? Actually, inflation in the Eurozone is falling. It was 10.6 in October, 6.1% in May, but it is still higher than our target, much higher, the target of 2%. In Greece, it was 4.1% in May. However, further inflation reduction is expected because energy prices are expected to fall further. In the beginning, actually, we had a supply-side inflation. Now, we have supply-side deflation. Second, supply chain improvements occurred after the end of the pandemic. The dynamic impact of monetary policy decision on the real economy. That means that past interest rate hikes have an impact now and in the future on the real economy. Monetary policy aggregate growth has fallen dramatically. M2 and M3 have fallen dramatically from 14% to 3.5% now. Also, we observe a substantial reduction in loan demand. In a nutshell, inflation in the euro area is expected at 5.4% in 2023 and 2.2% in 2025. So we converge to the target in the medium term. Core inflation, however, is more sticky. Wages are up, they try to catch up, following an increase in prices and profit margins. But definitely, we do not observe a wage price spiral in the Eurozone. Inflation expectations, whatever are measured, either by surveys or by market instruments, by derivatives, they remain close to 2%, 2.3%. Actually, 8 interest rate increases occurred since last July. Actually, this happened for the first time in 10 years. The DFR, the deposit facility rate, became positive for the first time since 2014. We had a 400 basis points, that's 4%, increase in ECB interest rates in less than a year. Also, we have a substantial balance sheet reduction. The TLTRO 3 redemption, reduction in APP reinvestments from March to June this year, and end of APP reinvestments are from next July. Actually, we had already 1.1 trillion euros reduction of the 8.8 trillion euros Eurosystem balance sheet since mid-2022. At the end of June this year, another 500 billion reduction through TLTRO 3 redemption. That is, 1.6 trillion euros reduction will occur until the end of this month. This is 18% of the balance sheet of the ECB, of the Eurosystem, sorry. This is the largest amount among large central banks. Of course, still we have some way to go. 125 basis points interest rate hike. 2, what is the terminal rate? Is going to be 3.75%, 4%? Simply, we do not know. We are data-driven. What will determine whether we're going to have 1 or 2 or none, and I'm serious about it, interest rate increase? It is going to be the macroeconomic outlook, it's going to be underlying inflation, it's going to be financial conditions. Hence, I cannot exclude anything, even a pause in July, but I cannot exclude 2 further rises. But we cannot say now. We are data-driven, and we insist on that. Are there risks? Yes. Risk of a recession. Already, we have inversion of yield curve, both in the United States, in Germany, in France. This is, those of you that are familiar with financial markets, an indication of a probability of a recession. That is, 10-year bond yields have an interest rate smaller than 2- and 3-year bond yields. We have German and Dutch negative growth rate in manufacturing output. There are also financial stability risks, as said before. Also, we still have high uncertainty worldwide and geopolitical risks. So how long shall we keep interest rates at the terminal rate? As I said, we don't know. It might be 6 months, it might be a year, depends on data. But definitely, when inflation converges to 2%, we know that the basic interest rate will also converge to 2% because our estimation of the real interest rate, of the natural real interest rate, is currently 0. And we are definitely close to the end of interest rate increases. I jump quickly to question number 3, whether there is a global shift of power towards BRIC countries. BRICS, they are the representative of emerging economies, and the name is due to Lord O'Neill. It's mostly China's progress that drives BRICS. Just to remind you that China's nominal GDP in 2022 was $18 trillion. That is 2 times more than the rest of BRICS GDP. In terms of GDP in purchase power parity, China now is the biggest economy in the world. The BRICS have not required any institutional legitimacy. They have created a new development bank and a contingent reserve arrangement to provide liquidity to their members. And of course, we do not expect a unified approach by BRICS due to their homogeneity, due to their heterogeneity, but I'm sure Lord O'Neill will have much more to say on this. Actually, they have not attempted to overthrow American hegemony. On the contrary, from what we read in the news, President Modi is currently paying a visit to President Biden. Globalization actually increased BRICS' role, especially after China was accepted to WTO in 2001, and BRICS were included to the G20. My question is, do we move towards a more fragmented world? What does this imply? What is the dilemma between protection versus free trade? Who wins? Do we have a reversal of the post-war developments towards more free trade? And what are going to be the implications if this happens? I close my intervention on Europe. Of course, it's going to be small because I have explained previously that European banks are characterized by strong fundamentals and strong supervision. However, as I said, financial stability episodes cannot be excluded. Interest rate increases, high inflation, and the eventuality of a recession may cause actually such financial stability episodes. It's necessary to adopt, as I said, the crisis management deposit insurance, which is because the current framework cannot deal with systemic crisis. We can deal with a crisis of 1 or 2 banks, but systemic crisis is a different thing. We need to be able to provide liquidity to a bank under resolution, and we need to adapt state guarantees rules to the new crisis management deposit insurance framework. The creation actually of a European deposit insurance scheme, EDIS, will prevent fragmentation, as I said before, and facilitate the smooth transmission of monetary policy. And the creation, of course, of a capital markets union will also, and is expected to enhance Europe's economic capabilities. Finally, in a nutshell, the European economy's short-term prospects are better than those expected in the beginning of the Ukraine war. And for those of you that are lovers of the stock market, it seems that stock market prospects in Europe are now more favorable than in the US. Thank you.
Thank you very much, Governor, and for answering the questions so directly. And now it's over to you, Lord Jim O'Neill.
Thank you very much. Good evening, distinguished guests, ladies and gentlemen, our hosts, Governor. I will try to answer the questions. I guess actually I'll do it right now very easily. I don't know. Before I attempt to give a bit more than that, I thought I'd start by reflecting on this very unpredictable world in which we live. And I'll give 3 stories. Some of you may be aware that I have a slight obsessive interest in a certain football club, Manchester United. And who would have dreamt when we did the treble in 1999 that other bunch that Fergie used to refer to as the noisy neighbours would be doing that today? Certainly not Alex, and definitely not me. So that just shows you what can be out there. Second thing I would say is the last time I was in Athens was about 5 years ago, speaking at another event, although I'm not sure it was hosted by you guys. Could there be any economics events not hosted by you guys that are worth speaking at? Not any good ones. Well, at this particular event, I can't imagine there was a single person in the room that ever thought Greece would have any economic growth again. And in that regard, one of the few things I learnt from far too much time fully occupied in the financial services business is whenever you are in a crisis, most of you will get out of it. And along with that, never let a crisis go to waste. And it feels to me that Greece is kind of doing that. And the third thing to say in that regard, and it's direct promotion, at the peak of the crisis, when I was still fully engaged as actually GSAM, Goldman Sachs Asset Management Chair, I invested rather crazily in a way in a business called Hellas Direct. And the 2 guys that started it and run it are sitting somewhere in here. And I just met them briefly before, and it sounds like that's doing okay. So maybe that's a story for everybody to ponder on, more than the nonsense I'm about to try and answer on these 4 questions. And I'm going to do them in reverse order. Let me just put my glasses on to help me with the little notes I've scribbled. So the last one first. Is Europe's economy protected from shockwaves? Obviously not. That one I do know. Let me throw some stats about the state of the world at you. Slightly different tone than what Joan said earlier. For many years, and I still follow it now, even though it's 10 years since I stopped being fully in the financial services industry, One of the indicators I would watch every month would be South Korea's trade data. It's the fastest country to report trade in the world. It report on the first of every month, it tells you what their trade was the month before. And as I used to jokingly say, unless South Korea is trading with Jupiter, it's a pretty high frequency indicator of the state of world trade. On the 1st of June, they reported that exports fell by 15.2% year on year in May. If there's any good news in that, it's that they fell at a slightly less rate than expected, albeit more than in April. Second global stat is from the monthly purchasing managers indices. Another, in the day when I did this thing for a living, highly reliable 3 to 6 month coincident indicator of the world. And the fact of the matter is the global manufacturing PMI was 49.6, which technically suggests world manufacturing is in some kind of recession already. However, the World Services Purchasing Manager Index was 52.8, which suggests it's doing okay. They are not compatible. One is going to go up, or the other is going to go down. I don't know which. It depends on a number of things. But the third stat to mention, as I relate it to this first question, the German IFO index, which is not only a very good high-frequency indicator of what's going on in Germany, but actually, because of Germany's importance to Europe, a really good high-frequency indicator of Europe, sadly, also fell last month. And the answer is pretty obvious, and Joan touched on it. Europe's biggest economy has been found out by two big things going on. One is its utter, in hindsight, excessive dependence on energy from Russia. And as an aside, its rather bizarre decision, in hindsight, to close down all its nuclear capability after the Japanese earthquake. And of course, and frankly, speaking as candid as always, it is rather ridiculous for Germany, Europe's biggest economy, to be effectively dependent on exporting to China. And Germany has just shown 2 consecutive quarters of negative growth. So the idea that Europe is insulated from stuff is, frankly, for the birds. The easiest of the 4 questions to answer. The third one, are we witnessing a global shift of power to the BRICS? Stamped on my forehead forever. It is now 22 and a half years ago since I had maybe the fortune or the coincidence of dreaming up that strange acronym. And I could spend all night talking to you about that. And my answer is I don't know. But what I would say, at a time where, again, people are talking about the dollar possibly being replaced by some currency to do with the BRICS. In fact, I think President Lula recently, very strangely, said there would be a BRICS currency. How would you like the job of being the central bank of that particular thing? Be a bit weird in my view. But as I jokingly say, actually often to many leaders, including those of the BRICS countries, it's a good job that China and India don't really ever agree about anything. Because if they did, and they were really serious, then we would be looking at a vastly accelerated rise of the power of the BRICS. Because, of course, within the BRICS, those 2 countries are increasingly becoming bigger shares of the world economy. And the Economist newspaper, no less, said at the weekend, and I agree with this, there is a pretty good chance that before this decade is over, that India's going to become the third largest economy in the world. And it will certainly get pretty close to it. And whatever happens to China, short of outright complete disaster, it is going to be close to becoming as big as the US in dollar terms before the end of this decade. But in terms of some kind of major geopolitical force, despite the fact there is lots of talk of endless other countries becoming part of the BRICS group, I await them being serious about anything other than being a club which the US is not part of, because that's what they all really do share in terms of enjoying. Second question, how long can inflation stay high and high rates with it? We had an expert giving you a pretty clear answer about that for Europe, and so I'm not going to try and compete with that, not least because I have no idea. Of the four questions, this is, in my opinion, actually the hardest. And I'll give you some completely contradictory pieces of evidence. As the governor said, and I think he used the phrase supply-side deflation, it's true. Who would have dreamt, 14 months after the invasion of Ukraine? Virtually every major global commodity price is significantly lower than it was a year ago. Significantly. Secondly, contrary to the intellectual brilliance of us strange economists, remember that idea that China would go from exporting deflation to exporting inflation? Guess which big economy in the world has got no inflation going on? China. And so it's not really entirely clear to me that we have got a truly global inflation thing going on. What we have had is some weird combination of a strange, unpredictable, and still unknown supply shock from COVID, and a big energy shock and food supply shock from Ukraine, combining with, dare I say, at the risk of provoking a central bank governor, far too much groupthink in global Western central banks about pursuing QE long after it ceased to do anything other than add to the perceptions of inequality in financial markets, in my view. The encouraging thing, which leads me to lean slightly to the optimists, and you touched on this again, Governor, the only few really reliable long-term surveys of inflation expectations that are out there are pretty stable. And it's not entirely clear to me that we'll look back in another couple of years and think, what was the scale of that fuss all about? At least I hope so. And then lastly, or the first question is, how possible have we got another 07-08 type crisis? I spent nearly 35 years, almost 24 hours a day in the financial services industry. I have no idea. What I would say to you is three things that will constantly be mixing together. Number one is greed and fear are always at the complete extremes of the world in which finance plays. And every now and then, we're right at one end, and every now and then, we're right at the other end. And whatever the brilliance of our regulators and central bankers, the idea that we're going to stop future crises is just ridiculous. Number two, it does seem, as the governor rather brilliantly articulated, that the financial system has kind of coped with what's been thrown at it so far, certainly way better than 07-08, way better than 98-99, way better than the one before that. However, the third thing is during those 35 years of 24/7 in finance, I never went through a period where interest rates were rising, where the only thing you learnt from it afterwards, that all of us lunatics in finance were nowhere near as smart as we thought before they started going up. And so if interest rates don't start peaking soon, we are definitely going to see more fallout from the financial system, probably in places that we didn't expect. And in that regard, maybe to discuss this further, how many people here would have even have heard of the name Silicon Valley Bank 6 months ago? To discuss. Thank you very much.
Thank you very much, Lord O'Neill. And our final speaker on the panel is Eleni Vretou from Attica Bank. Welcome.
Dear esteemed ladies and gentlemen, good evening, Your Excellencies. It's very difficult and intimidating to be speaking right after Lord O'Neill and the Governor, so I'm not sure how original I can be tonight. But I will try to offer a perspective from the banking, the supervised banking, and also the clients. I think if we are to ask the question, how possible is a crisis in the financial world after 2007 and 2008, I think I would draw a parallel with the car industry or the airplane industry. So every time you have an airplane crash, you try to find the ways to actually protect better the industry and avoid a future crash. But you cannot eliminate that. And the same happens with the cars. You can be a reckless driver, even if you do have regulation, and you still can run into a crash. So I think despite all the good effort, we cannot eliminate the possibility of risk and the possibility that we might indeed run into financial crisis again. I think another aspect that we have seen is that the current generation of business people, bankers, people operating in this world, they're not used, as Lord O'Neill said, in this environment that combines high costs, high interest rates, and all these challenges around employment, and the fact that you try to have a globalized world, but each country tries to become a little bit more introvert as well at the same time. So if we look at the 2007 crisis in the US, where we basically, the Americans lost about 9.8 trillion in wealth, which is a phenomenal number, I think we have to look at the sources of the problems back then. So what actually drove the crisis back then was that you had a very relaxed criteria of lending into mortgages, so the subprime lending, as we all know, which did, however, give a boost to the film industry, because we've seen I don't know how many movies around the crisis in the subprime lending. We had the housing market bubble. We had complex financial products which went hand in hand with very high risk-taking, excessive risk-taking by the banks at the time. And you had insufficient and inadequate regulation and weak risk management internally, by the banks, which, as the government said, did continue in present cases in some of the banks that we did see fail in the US recently. And clearly, you had the interconnection of financial markets and bank failures in the sense that, once you had the collapse of Lehman Brothers, that created a domino effect, a spiral effect into other markets, coupled with the weak intervention at the time of the regulators and the government. So what has happened since, and what we all of us, living in banks, and I'm sure all of you clients complain, is that we have seen increased regulation since then. So we have supervision. I think it's pretty clear from what has happened in Europe versus US that the regulatory system in Europe, with the several stress testing, is indeed quite rigorous, which avoided future collapse, as we have seen with some banks in the US. We have transparency and risk disclosures that are quite strong from the regulated financial institutions themselves. So we have market discipline, we have a banks management team that have strong governance now with several committees and a high risk culture that help us avoid excessive risks. We do have resolution mechanisms as well that do help the institutions, the failing institutions, to happen in an orderly way, like the BRRD. But we also have an enhanced deposit scheme. Whilst this might be inadequate or imperfect, but it's still good progress versus what we had about 15 years ago. And clearly, we have some stronger intervention in the fiscal and monetary policies. in the sense that we have seen quantitative easing in the past, like, you know, we have seen rescue packages. We've recently had, with the pandemic, a series of packages that help sustain the economy, but at the same time, give also banks capital relief measures that would help them, like, you know, to remain afloat. If we look at the recent banking crisis in March, I think it's a combination of things, as the government said, like, you know, and Lord O'Neill. Effectively, we have seen this creation of inadequate, like, measures, but also the fact that it was a unique, like, you know, bank run in Silicon Valley, in the sense that it happened online. We haven't seen the pictures of people rushing in the branches to, like, you know, get their deposits back. But equally, I think what we have seen is the fact that people say in the banking industry that a bank can close either by the regulator or the customer. And what we have seen in the US is that, like, further to that in Europe, is that sentiment was actually, like, you know, multiplied very quickly. This is one of the reasons why we have seen also the problems of the distress in Credit Suisse, which again, like, led to some, like, you know, distress in other European banks, like, for instance, Deutsche Bank, where we have seen people, like, you know, shorting the stock or, like, you know, affecting clearly their equity value in the market. To our relief, I think we have not seen such incidents in Greece, and I'm saying this coming from one institution that has been more or less fragile. I think during that week that when Credit Suisse was failing, we have seen a deposit inflow even in our bank, which shows that indeed, like, you know, the customers still believed, and therefore the sentiment did not take the excess, the extent which we have seen in other institutions in other countries. I think also, like, you know, what we need to see is, like, you know, both from a European bank perspective, but also from a Greek bank perspective, we have other inherent improvements that allow us to feel safer in the current world. So both European banks, but also, like, you know, Greek banks now have returned to profitability. So both in 2022, but also, like, you know, the Greek banks, after deleveraging with the non-performing loans, we have seen a return to profitability. Even though this might, you might still have threats to that, it's a sign that, like, you know, you return back to normality. Resilience, I think capital ratios across Europe, like, you know, stand quite in satisfactory levels. So I think the aggregate European average of CET1, the Common Equity Tier 1 ratio, is at 15.3 at the end of 2022, which is well above the minimum regulatory requirements. And the third and last, but not least important, is liquidity and funding. So the average liquidity coverage ratio in Europe exceeded 160% at the end of 2022, well above, like, you know, the American average. And again, the quality of deposits is also stickier in the sense that you have customer deposits, like, you know, with a good mix of both retail but also institutional clients as well. So therefore, I think that we cannot exclude the possibility of financial crisis, and I think we will always have to remain vigilant. However, I think we all feel a lot safer, and we all feel that we have the right governance in place, the right disclosure, but also quite robust regulatory system to ensure that we can weather any future crisis that might happen. So I think I've been briefer than what I was expecting, but I didn't want to repeat much of what was said previously. So thank you.
Well, thank you very much for that. Now, we're actually at the time when we should be having our first course. We've got about 2 minutes, but I think we can go and have a bit of a discussion just for the benefit of the waiters and kitchen. Maybe we can delay the first course for 10, 15 minutes. 15 minutes, is that all right, Nectaria? Yes, okay, good. So that we can have some, no such thing as a free lunch or dinner.
We're the gold sponsor.
Okay, so I think the message that we got from all of you was actually that a crisis is quite possible, or even that inevitably at some point there will be another crisis. We just don't know when. We don't know whether that will be another kind of external shock in the form of a pandemic or a war or some something like that, or whether it could be a crisis brought about by the strains that we are seeing now in the world economy and in the financial sector in particular. So, but we also heard from the governor that Europe is better placed to, or more resilient and better placed to deal with that. So I want to just dig into this a bit more, and I want to ask in particular, Governor, about Greece and how you see Greece and Greece's position now compared to what it was a decade ago, and Greece compared with some of its southern European peers as well. You may not want to comment about those, but you know, how do you see Greece now, and what should the incoming government and what should Greece be doing to really make sure that Greece is in the best possible position to avoid another problem?
Thank you. Greece now is in a position where it grows faster than the European Union. On average, we're going to grow about 2.2, 2.3% this year, versus 1.9% is the official estimate, although, as said earlier by Lord O'Neill and myself, we see some evidence of the acceleration of growth in Europe. Second, public debt to GDP ratio is falling very rapidly. The banking system is in a much better position. Now all its systemic and non-systemic banks have high capital ratios, high liquidity ratios, there's confidence, positive flow of deposits. So in a way, Greece lives in a, I would say, a bit of optimism, something that we lacked because of the crisis years ago. Of course, it survived because Greeks wanted to stay in the euro, even in the darkest moments in the past. The support of the euro never fell below 60%. So we took very tough measures, austerity measures, to correct imbalances, macroeconomic imbalances, the twin deficits, a lot of reforms, social security, the tax system, the banking system, and of course we had an enormous amount of assistance from our peers, both Europe and the IMF, which is the world. It's the biggest package of debt refinancing ever given to a country at very favorable terms. So it was the willingness of the Greeks to stay in the euro and take the necessary measures, but also the cohesion measures and the assistance received by Europe. So since Greece evaded crisis at that time and evaded Brexit, I say that now I see very small probability of a crisis in Europe of a similar dimension.
Thanks. If I could just follow up on that. So you mentioned the public debt to GDP ratio coming down, and it came down by more than 20 percentage points last year. But of course, it's a question about you know, how important that is when, in nominal terms, the public debt is still, you know, growing, usually, but the ratio. So why is that important?
Usually, I mean, your debt is large or small, depending on whether you can service it. So this is why we measure it as a percent of GDP, because it's not so much the importance of absolute amount of debt, but your ability to service the debt. Apart from the debt falling, there are the parameters of debt, because of the restructuring and the refinancing, are extremely favorable. Just to mention a few things, with nominal GDP growth of about, okay, forget about 2022, where inflation was high. Let's say this year, 5-6% nominal GDP growth. When the refinancing interest rate is only 1.4, the snowball effect, which is the difference between the nominal GDP rate and the average interest rate on public debt, is 4 percentage points. It's huge. So even if you don't have a primary surplus, your primary surplus is 0, okay, the debt to GDP ratio will fall by 4 percentage points. This is the important thing of the restructuring of Greek debt we had, but on top of this, we plan to have primary surpluses. We plan to have a 2.2%.
I was going to ask you, about this.
No. We don't like free lunches. We don't like free lunches.
I saw that you made some comments.
We'll pay for our lunch.
Yeah.
So for our dinner.
I heard you were talking about an appropriate fiscal policy for Greece. Now, I think Greece did record a very, very small primary surplus even last year.
Yes.
We know that
we plan a 1.1% primary surplus this year, and more than 2% in the years to come. So this is sufficient to bring the debt to GDP ratio down by about 10 percentage points every year.
And do you think that's realistic to hit those over a long time period to hit those primary surplus targets?
Yeah. Greece's problem now is the opposite of what it was before, and the opposite of the problem of many other. Sorry to Greece to monopolize the interest, because
good.
I think it's worth having this conversation, because Greece now, I said, has the opposite problem. I mean, Greece now is growing fast, so and with the investment grade coming, we are going to have an inflow of capital, because as Lord O'Neill knows very well, out of 10 funds in the world, 9 of them have a prohibition saying you cannot invest in a jurisdiction which doesn't have an investment grade, and only one can do. So you can imagine the flow of money that we're going to have everywhere. So our problem is how to manage overheating. It's not how to manage a recession in Greece.
Okay. A good comment. So when do you expect investment grade? Because this is my final question, sorry, about Greece, and we'll move on to wider topics. But when do you expect that? Because I guess everybody imagined this would be a very tough year to achieve investment grade, given what's going on and investor risk aversion, everything else. When will it happen? When do you expect it to happen? And what do you think are the kind of preconditions for it to happen?
Markets have already priced in investment grade. I mean, the yields in 10-year bonds are lower than in other countries in the Eurozone which have investment grade. Now they are close, they are very close to Spain's, for instance, now. So I think, in my view, markets and credit rating organizations will wait for the declarations of the new government regarding the economy. They will proceed immediately thereafter, I think.
Okay, thank you. Thanks for answering those questions. Moving on to you, Lord O'Neill. So you seemed rather less sanguine, maybe, about Europe and the problems that the region is focusing on. And I just wanted to ask you whether you think that we're really looking at the problem in the right way. And what I mean by that, often what we have is a kind of separation of a discussion about the financial economy, the financial sector, and the real economy. And do you think that the fact that this easy money policy persisted for so long, basically for the best part of a decade, can be seen as an expression of the relative weakness of the European economy, the developed world economy? Because, as you said, I was struck by your comment that inflation is a first world problem, really. It's a developing world problem. There isn't really a big problem with inflation in large parts of Asia, where the economy is much more dynamic. So, the result of this policy that went on for so long was this kind of, we've created zombie economies. The UK is a case in point, I guess. Many companies have survived.
Zombie economy?
Yes, well, I'd like to be provocative.
It's true, it is.
No, I'm talking about zombie companies that were created as a result of easy money policies, which in normal times, with normal interest rates, would not have survived.
I mean, you're linking a number of things together.
Yes, so the question is, which Where do you think growth is going to happen?
What I was really, I mean, first of all, you certainly can't divorce financial economy from the real economy. You know, it's a ridiculous idea. What I was really driving at, and maybe in this, you know, listening to your amazing comment, I can't resist the slightly facetious thing of saying, it's like being in the new Switzerland of Europe here. I mean,
You are.
I mean, it is fantastic what you guys have. It is fantastic.
Yeah.
But in the context of your question, never let a crisis go to waste. And the problem in Europe has been, in my opinion, ever since we've had the Eurozone, is that its biggest country basically survives on exporting to everybody else. And you can't really have a very stable system when that's the case. And Germany has somehow, and German policymakers hate others saying it, but it's blatantly obvious, they have to find a way of having more domestically generated growth. It's pretty straightforward. You can trace, for now a decade, Germany's cyclical growth as being almost a direct consequence of China. That is ridiculous for a country of that number of people in Europe. So that's what I really meant. But I think the fact that Germany's had this shock from Russia with its energy supply, as with the whole thing going on about China together, from what I can see, is forcing a lot of German thinkers to begin to think there's a different way. And that's what I really mean. On your other question, or the question you really then went on to ask, I mean, it's blatantly obvious to me also that QE served a fantastic purpose in 2008 for 3 or 4 years. But I'll answer it partly with a question. Is it any surprise that the noughties, until COVID, were the single best decade ever for bonds and stock markets together during a time of this amazing QE all over the Western world? And is it any surprise that that coincides with this rather troubling perception of our people that it's an increasingly unequal world? And I'm a good friend of Otmar Issings, who was the first chief economist of the ECB and previously the chief economist of the Bundesbank. And I joked with him when I saw him for lunch recently saying, maybe you were right all along. Maybe central banks should have a dual mandate. Because the core problem, and I'm not aiming it at one specific central banker because there was broader issues, because there were set these targets by the governments by and large in the US, UK, is because they thought the only thing they had to do was hit a headline number or something close to it of 2%. If it was below it, you just did more and more QE without even thinking about the broader consequences. And you touched on the broader issue is now we have a whole world of business that has to get off the drug of zero rates for the past decade. And surprise, surprise, we're finding out a lot of them weren't that good a business. Whether it's Silicon Valley Bank or whatever's around the corner next. But hopefully, never let a crisis go to waste.
So coming back to the German growth model, which, as you say, is now is confronted with two challenges. One, the challenge that some of its key heavy industries, chemicals, metallurgy, and so on, were so dependent on Russian energy supply that they're really struggling, and their competitiveness is really in question now. And they're also so dependent on China. Do you think that realistically Germany can evolve a new growth model? Because things seem to change quite slowly in Germany. I mean, where is this change going to come from?
I mean, in some ways, there's a third issue going on linked to the export side, but Germany's real fundamental edge has been high-class auto exports. And the whole shift to electric cars is a massive shock as well, which That one, I would bet they're going to master. But the bigger problem linked to this question is, you guys at The Economist know this as well as me, over the long term, economic growth is driven by two things. The changing dynamics of the number of people in your labour force, i.e. whether it's rising or not, and Germany is amongst the worst in Europe, certainly amongst the big countries. Italy is worse than Germany, but Germany is the next worst of the big four. So unless Germany discovers accelerated forms of productivity, its growth potential is weak. And if it's going to remain locked into exporting to other places in the world, it will suffer more than other places every time that country has a shock. And if I were running Germany, I wouldn't want to be in that position. Mm-hmm. And it also means, even though it now feels so much calmer 10 years after the Eurozone crisis, it's not a very stable state of affairs to have persistent stability of the Eurozone.
Mm-hmm. I can't resist asking you about the UK, actually, having mentioned it already. I mean, many people are predicting...
What an embarrassing country I live in.
We're predicting a recession in the UK. I don't think that is likely to happen. There will be a recession in Germany. I mean, how do you see the UK economy? We're going to come and talk about this a bit more afterwards.
The UK is completely nuts. We are still living 6.5 years after our population decided to leave the EU, basically not having a clue what we're doing, frankly. If you look at opinion polls today, particularly those of the sharpest people that predicted we would leave, in virtually every part of the country, bar Lincolnshire, those same people that voted out would vote to go back in. But our political leaders daren't talk about it because they're frozen by the Brexit thing. But whether you look at our trade performance, our GDP performance, our labour force participation, and it's so bad it's funny. Our net immigration has accelerated since we left the EU. I mean, and our policymakers don't know or don't have the boldness to try and deal with the huge domestic inequalities that probably were the reasons why people voted to leave in the first place, because they wanted to blame someone and thought it was good to blame Europe. And I thought myself, well, the shock of leaving might be so powerful that it will force our policymakers to do things about the north of England, ex-coastal towns. Nothing has really happened.
Okay, thanks. It's good to get your perspective because we're going to come back, obviously, afterwards, after the first course, and talk about the UK a bit more. But we are. Not you. On our next panel.
So for some of us, there's a partial free lunch.
Could I provide a reply? Because I'm sitting in the Governing Council of the ECB. I'm one of the oldest members, so I think I need to reply to the accusations of QE. And listen, if we didn't have QE, with a zero bound, Europe now would have the same problem as Japan did for 20 years. So we're going to have a Japanification of the European economy. All the models showed that. So we're not, I mean, and it was almost unanimity.
For a few years,
don't think that.
For a few years, definitely true.
Yeah. Okay. Second, it is not QE that has created the inequality in the world. It's technology with a lack of proper institutions. The MIT economist Akemoglu has written an excellent book about how the combination of technology, of technological progress, and the lack of institutions to deal with inequality.
I mean,
it's not monetary reasons that create inequality.
I kind of agree with all of that, but I try to emphasize the perception of inequality, not the actuality.
Okay, maybe.
And in many Western democracies, people out there think, GDP? I've not had any for 20 years.
Yeah.
All you guys, you might have had no GDP briefly, but our policymakers rescued you.
I want to bring Eleni in for kind of final word and bring it back to Greece, really, and to ask you about the how you see the state of the Greek banking system at the moment, you know, both in terms of the positives and the challenges, and are you worried at all that we might see some, you know, negative developments given the cost of living crisis, the challenges facing businesses with high interest rates, that we might start to see more business failures or rising NPLs, or how do you see the state of the sector at the moment?
Well, I think first of all, we all need to recognize all the good progress that has been made in the Greek banking sector. So if you look at the 4 systemic banks, they've been able, through the support of the government through the Hellenic Asset Protection Scheme, to dispose their NPEs into quite modest levels. So they're all, the 4 systemic banks stand at single-digit NPE levels, albeit still higher than the European average. The capital position is much stronger right now, and equally they have had access to international equity markets, as we have seen, not just through the different, like, you know, share capital increase of 2013, 2005, but also most recently through the share capital increases of Piraeus Bank and Alpha Bank that actually approached international, like, you know, good type of, like, you know, hedge fund, but also long-only investors, like, you know, into the share capital base. Equally, we've seen that the turbulence that we had during the capital control, so, you know, where we had around 40 billion euro of deposits flight back then, which basically made the regulators, like, you know, impose the capital controls to protect the system. We've seen the deposits, like, actually come back and to be of quite good quality as well. So, you know, stable, like, you know, funding base for the Greek banking system. Equally, we've seen most recently the less systemic institutions, like, you know, successfully complete the share capital increases. We have one more coming up soon, like, you know, which is going to be for growth phase. But we've seen that the whole system is now, like, you know, a lot more strengthened. Does this mean that there are no challenges? I think surely there are. So first of all, if you look at the systemic banks, they still have, like, a high percentage of DTC, which is not considered to be the best quality of capital, but is something that needs to be addressed. The profitability is still quite slim in the sense that, like, you know, that was driven by the interest rates, but also in the previous years it was because you had the access to the TLTRO, so, you know, the support by the European system. But again, I think, like, you know, you need to look at the Greek banking in the sense of what is actually the real economy. On one hand, what do you see is the opportunity, because you still remain under leveraged in terms of private debt. So private debt in Greece stands at 55% of GDP. If you include the debt that currently sits with the NPL services, that stands at 75%, which is still a lot lower than the 100% that you see in the European average, or what was the historic average of the Greek banking system. So there is opportunity. Having said all that, if you strip out in 2022 the funds that were given by the Recovery and Resilience Fund, which is a temporary scheme, you had negative credit expansion, and equally the SMEs that you have in Greece, the very small businesses, they're quite small, they don't have governance, they don't publish financial statements, and therefore they're more susceptible and vulnerable into whatever future shocks you may have. The fact that during the pandemic the Greek banking system was resilient, that was to a large extent thanks to the support that you had from, you know, the European mechanism in terms of capital requirements, but also because of the Greek, like, you know, liquidity measures that were given to the economy. Therefore, I think that we do have a much stronger financial system here in Greece. I think that this is sustainable, and this is going to benefit from the growth that we see in the country, particularly with the investment grade. We are focused right now as the less systemic institutions to actually further strengthen our capital base. So, I think consolidation is also something that is necessary, as well as the de-risking, the further deleveraging of the balance sheets of the less systemic institutions. Because one thing that we have seen is that even though you are less systemic, you still pose a threat to the system, if only by sentiment. And you've seen that the example of Credit Suisse in Europe, if you looked at the model, the actual models and the capital ratios, they weren't bad. Like the Credit Suisse had pretty decent ratios. What actually precipitated the crisis was sentiment by the customer, the client, the consumer, etc. So one of the things that I think particularly the regulator here in Greece is very sensitive to is how we actually ensure that the sentiment remains strong and we continue to strengthen further the less systemic institutions for the role that they can play in the economy by offering more competitiveness.
Okay, thanks. That's great. I think it's time to eat something. Please join me in thanking all our panelists for a really lively discussion. And please enjoy your first course. We'll be returning to the stage later to talk more about the UK and the UK's trade strategy in Europe. So enjoy.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers
Ladies
from
and
leaders.
gentlemen, it's very nice seeing
Executive.
everybody enjoying their conversations. But can I ask you to sit down, and we're going to have our next session, which is a little bit shorter than the previous one, quite a bit shorter. But if you can all take your seats, we will get started. Please sit down, and we'll start our final session of the evening. Okay, I'm just going to give a moment for everybody to take their seats. Please do sit down, return to your table and sit down. You'll have a chance to carry on the conversation afterwards. Thank you. Thank you very much. Thank you. Okay. It's my pleasure now to introduce our keynote speaker for the evening to talk about the UK trade and investment strategy for Europe and strengthening relations with Greece. So please, Chris Barton, CMG, His Majesty's Trade Commissioner for Europe, welcome. Thanks very much for joining us, and please join me on the stage.
Well, thank you very much indeed, ladies and gentlemen. Thank you very much too. I must say, I started life as a teacher, and I've always had this horror of standing in front of a group of people and trying to keep control and it all being chaos. So thank you very much indeed for being obedient and sitting down. It's a great pleasure to be here tonight. My name is Chris Barton. I'm His Majesty's Trade Commissioner for Europe, and that means it's my job to encourage a thriving UK-Europe trade and investment relationship, and it is a privilege and pleasure to do that. Now, I'm going to be a little bit more cheerful than maybe some of the discussion that we've had today, partly because it is my job to be cheerful, partly because I actually genuinely believe that there are many reasons for us to be very positive about the long-term trajectory of our trade and investment relationship. So let me share just 4 things that I think we should be cheerful about in terms of the UK's trade relationship with Europe, UK's trade relationship with Greece in particular. The first thing is to underline how deeply the UK believes in the importance and the power of trade and investments with Europe, with Greece, and overall internationally. Why are we so in favour of it? Partly for standard reasons, for being pro-trade. Absolutely believe that it drives economic growth and it creates jobs and it improves living standards. That's true at any time, but I'd say the particular times why I think that is important now. It is important now as we face collectively a range of the economic and political headwinds to which we referred to earlier. It's important now as we want to make the transitions to our economies to a more sustainable future. And we believe very strongly that if we're going to do that, we need to do it together. It will require significant trade, significant investment, significant sharing of expertise between us if we're going to make those fundamental transformations of our economies. And I also think it is vital for what in the UK we have called our levelling up agenda, and again it was referred to earlier on today, making sure that the benefits of growth, of jobs, of economic prosperity are shared across our nation as a whole. And that is absolutely fundamental, both as an end in itself and also as a means of ensuring support for what we're doing. So absolutely trade and investment is something to be celebrated, and it's something to be celebrated here in terms of UK and Europe. Of course, we've been on a journey, as they say, in terms of our relationship, the UK and the EU, and I'll say something about that in a second. But I think it's worth just underlining at the moment, particularly given what's been happening to the east and north in Ukraine, just how important it is that countries such as the UK and Greece, who share such a rich history, such a shared sense of values and of culture and what is right and what is wrong, that we use the opportunities to strengthen our trade relationships as we share all the different ways in which we want to stand up for the sort of societies that we believe in. So yes, there's an economic reason, but there's a more wider, a more fundamental reason why trade and investment is so important, and why UK deeply values its trade relationship with Greece, deeply values it with the EU, and deeply values it internationally. And just to put a number on it, so trade, UK-Europe trade, UK-Greek trade last year, £11 billion. That is a hugely significant amount. And for UK trade with Europe, it remains by far and away the most important trading region for the UK. And I will confidently predict it will remain by far and away the most important trading relationship for the UK till we're all well in our retirement. So that's the first thing to celebrate, is how deeply the UK values our trade and wider relationship with Greece, with the EU, and more generally. Second reason to be cheerful is in terms of the recovery, that we are making good progress on recovery. Of course, the last 3 years or so have been extremely tough. They've been extremely tough from COVID. They've been extremely tough for the Brexit transition. They've been extremely tough for the Russia-Ukraine and the implications that has had more generally. And that has reflected in our trade stats. And we saw a significant reduction in UK exports to Europe as we left the single market and the customs union. But that recovered very quickly from those initial drops. And recently we have seen, at least in money terms, the trade that the UK has with Europe is at the highest level it has ever been, higher than it was pre-Brexit, pre-COVID, and pre-Russia-Ukraine. Of course, some of that is to do with prices, but even in real terms, we're pretty much back up to the sort of levels we were back in 2019. And equally important, I'd say, sort of politically in the context that we have, of course, as we went through Brexit, it led to some uncertainties. It led to some frictions that weren't there before. It had an impact in terms of goods and services and the free movement of people. Those are given. But we now have the certainty in terms of the relationship with the Trade and Cooperation Agreement and then the Windsor Framework resolving the last key outstanding issue in our relationship. That is there. We have the certainty. We have seen that businesses are adjusting to the new arrangements as reflected in those trade stats that I've said. And then when you look at the major issues that are around facing us collectively in the international sphere at the moment, you see UK and Greece, you see UK and the EU working together in response to Russia-Ukraine, in response to the climate change crisis, and in COP. You see it in the World Trade Organization, you see it in the G7, you see it in the G20. In issue after issue, actually, there is a lot of constructive, close relationship because those fundamentals are absolutely still there in terms of the way that we look at the world. And again, if you like stats, I know you can do stats, lies, as they say, stats, and lies, damn lies, and statistics. But we have actually seen significant growth even in the last year. UK-Greek trade increased by 90% last year compared to the year before, showing that the recovery is really strong. And yes, we've been through a very difficult stage, but we are coming out the other side. And both economically and politically and commercially, we are seeing a strong recovery from what have been some really challenging years. So that's the second reason to be cheerful. Third reason to be cheerful is to look at the long-term future. What is a realistic prognosis for what is going to happen to UK, Greek, UK and UK-EU trade over the coming years? Well, I think that we have every reason to be positive about the long-term future. Why do I say that? Well, we have the baseline, as I've already said, in the Trade and Cooperation Agreement. Of course, it's not the single market, it's not the customs union, it doesn't try to be, but it is a world-class free trade agreement. It is at least as good as the trade deals that the UK has with any other region in the world, at least as good as the trade deals that the EU has with any other region outside the single market and customs union. So we have the fundamental basis for a really strong trade relationship. We have brilliant UK businesses, brilliant Greek businesses, and you see that on both sides and represented around this room. You see enormous potential in terms of different sectors of our economies for growth. And I just highlight sort of three briefly in particular. That low-carbon transition I've referred to. Of course, there's an imperative for us to make the low-carbon transition. It opens up enormous investment opportunities, and we're seeing that in major UK companies investing and operating in Greece, major Greek companies investing, operating in the UK to deliver that low-carbon transition. Not only is that good for the environment, it is absolutely good for our economies and strengthening our trade relationship. So that's one area where we can be very positive about the future. I think also on the technology area, the UK is proud to be one of 3 countries in the world that has a technology sector worth over $1 trillion, alongside US and China. So we're a world-leading country in terms of our technology, and that development of it. And Greece, again, we are seeing huge numbers of companies, of Greek companies. I'll be meeting a wide range of them tomorrow, investing in the UK, taking up the huge opportunities there. And you've got UK companies investing, trading in here. So technology, another area where we're going to see major growth. And of course, that spreads throughout the economy. And third area, which I think is worth highlighting, is an area where there is a particular reason for opportunity in our trade and investment relationship, is in the maritime sector. Of course, Greece is well known for being a world leader in the maritime sector. UK also has a very powerful maritime area. We estimate it contributes 55 billion to our economy. Overall exports about 15 billion. Even just in ships themselves, about 4 billion exports from the UK. And that is an area where we can contribute a huge amount in a complementary way, with the UK providing a lot of the services around brokering, around insurance, around the legal firms, the financial support, and so forth. So another area where there is huge opportunity to grow. So we'll have huge support for the trade and investment on both the UK and the Greek side. That's true for us together. It's true in the European Union context too. So that's number one. Number two, the recovery is going strongly. We are, in money terms, I say, higher than we've ever been in our trade. In real terms, almost back to levels we were in 2019. And the opportunities for long-term growth are huge. So I think those are three really powerful reasons to be positive as we look at the future. Of course, it's going to be tricky in some ways. The issues remain. We're very well aware of the overall economic context, and the global context we talked about is difficult. But there's masses we can do together. And then let me just end with that point, which is why from the UK government side, and I'd say a fourth reason to be cheerful, is that have a government, and I think I'd say this is true across all the mainstream political spectrums in the UK. You have governments who very strongly support trade, who will work actively to encourage it, to encourage investment into the UK, to help Greek companies invest in the UK, take the advantages there, to help UK companies invest in and export to Greece. I know that the Greek government is doing the same. And together, if you have that partnership of people wanting to seize those huge advantages, you've got business with the know-how and the drive and the finance to do it, and governments that are supportive, I think that gives us every reason to see our relationship go from strength to strength. So those are four reasons to leave you to be cheerful as you eat your main course. But just before you do, I think I'm going to be asked a couple of questions about it. Thank you very much indeed.
Well, thanks very much for that, Chris. Much more upbeat outlook for the UK than we heard earlier. I know your remit is mainly trade, but I just wanted to ask you a little bit about investment as well. I mean, I know part of your job is to attract inward FDI into the UK, but I wonder if you could tell us a little bit about investment the other way from Great Britain to Greece. What's been happening with that in recent years? What do you expect for the future? Do you think that Greece went off the radar a bit of investors because of the crisis years? It seems to have come back, certainly in some areas, and obviously Brits love Greece, we know that, and Greeks. So can you tell us a little bit about that?
Yeah, absolutely. Well, thank you. And from our perspective, we see that investment and trade go absolutely hand in hand, and indeed is one of the reasons why we are supportive of UK companies investing overseas. Sometimes people have said, well, is that something that you should support as government? We say absolutely, because companies that invest overseas then often generate some demand for exports from the home country, strengthen the relationships, and it's a way of growing. So I absolutely see that as going hand in hand. And again, I think some of the reasons that I pointed to earlier on why I think it is legitimate for us to be positive about the prognosis is because some of the areas where we're wanting to make these fundamental changes to our economies, yes, the costs involved, but it opens up enormous opportunities, particularly in in the energy side as we make that transition, as we make our transition to the way we do business from a sustainability perspective. And then in infrastructure, and I say not in Greece and also in the wider region, I cover, for example, the Western Balkans as well, and then in the whole of sort of Central Europe, across all those areas, we are seeing huge opportunities that are being exploited in terms of UK companies investing in infrastructure, if that's rail or that's road or it's shipping or it's ports or energy. So yeah, a lot of investment going in both directions. I would just say, because in terms of investment into the UK as well, because there's sometimes a narrative of, well, what's happening to investment in the UK. Actually, in terms of at least the greenfield investment into the UK, that for the last sort of 3 years or so has been on a very positive upward trajectory, which is extremely welcome. And Ernst & Young, even last week, said that on the financial services side, London continues to be the most attractive place by a country mile in Europe for investment. So I think there's a really strong argument in both directions.
Yeah, I mean, that's a good point, because the assumption was that after Brexit, the UK, which had been probably the magnet in Europe for FDI, global FDI, it was coming to the UK. Much bigger inflows than elsewhere in Europe, and the assumption was that would fall off a cliff after Brexit, and that didn't happen immediately. So it's good to hear a little bit more about what's been happening in the past few years. Yeah, so
at the time there was some reduction in investment, at least on the investment on the greenfield side, was actually sort of immediately following the Brexit vote, and my sort of suspicion is that was driven, there was the uncertainty, and as we all know, uncertainty can be very difficult for investment, so there was a reduction then. But actually, then it picked up, and certainly once we got the TCA in place, we've seen rapid increase. And I think it also underpins that the fundamentals for investing, whatever the impact of Brexit one way or the other, fundamentals for investing are so strong in terms of both the opportunities in the UK, in terms of those sectors I mentioned where we want to develop in infrastructure, in energy and elsewhere, so huge opportunities. There are also the overall investment climate is a very positive one, and that's something that we hear again and again from investors, is that the overall sort of regulatory environment, the skills, the finance, the approach to regulation has been very sort of attractive for investors. So we are seeing that positive growth. Equally, seeing here, as I understand, very significant increase in investment in Greece.
Well, I guess we should address the elephant in the room, which is was raised earlier, that there is this external perception that since Brexit, the UK has gone to the dogs, as we say in the UK, that things have gone very badly, that it's all been a disaster and so on. Has it, or is that just a misconception? UK is still a G7, a G20 economy. It's still up there, ranked 5th probably in the world in terms of its GDP, size of its GDP. So what's the real narrative for people in this room about the UK? Maybe a different slant than we've heard previously.
I would say absolutely. I mean, have the last few years been difficult? Yes. That is true for the UK, and some of that has been specific for the UK. Has it been difficult for Greece? Has it been difficult for almost every country in Europe and beyond? Yes, we've been through a very challenging period. So I'm not going to pretend that everything has been wonderful. It hasn't. But if you look at what's happening overall, economic growth, as I say, is positive. Okay, it's not roaring by certainty, but we are still growing. Trade, as I said, has sort of bounced back. But beyond the levels it was before, at least in money terms and pretty much in real terms. Investment is significantly higher. So in terms of all the macroeconomic fundamentals against a really challenging backdrop, I think that, this idea that sort of all is woe in the UK is absolutely not there. Other things that we need to do more and better of, yes. But is the potential for further growth extensive? Yes, and we are seeing that in both geographically on that levelling up agenda I mentioned, which incidentally is one other advantage of the low carbon transition, that we're seeing areas in the UK which for not just for the last few years, but for decades have seen significant underinvestment, are actually now seeing a huge growth from the low carbon energy perspective. So yeah, as they say, don't believe everything you read in the papers.
Okay, and during the Brexit campaign and afterwards, indeed, since then, we've heard there's been a lot of talk about global Britain. Now, in your introduction, you were really emphasizing the importance of the UK's trade ties with Europe. It's very strong relations with Europe, which will endure. But again, there has been this focus on a shift, a wider lens for the UK and a shift to the Indo-Pacific. So can you tell us a bit more about that? How should we see this balance between Europe and the rest of the world?
I think that the key is that it's both and, that they're not alternatives. And I would say it's exactly the same for the EU's trade policy. Does the EU want within the single market for that to work as effectively as possible? Does it want to see trade growing with its near neighbours? Yes. Does it want to see trade growing with the rest of the world? Yes. And the same is true for the UK. So, I mean, Europe will continue, as I say, to be much the most significant region for us in terms of trade for the foreseeable future. But alongside that, and it's not an either or, it's as well as the importance of the Europe trade, we want to see the growth in Asia-Pacific and elsewhere. And so, for example, our new free trade agreements that we did after we'd done the sort of replica agreements for all the EU deals was with Australia and New Zealand, an accession to the snappily entitled CPTPP, i.e. the trade agreement between 11 Pacific countries, reflects the fact that we want to seize the opportunities there too. But I think the fundamental mistake that is sometimes made is people say, well, is this about one or the other? The answer is both, and they are complementary, and they go together.
Thanks. I've got a final question for you, but I'm sure there's a lot of people in this room who've got quite strong ties with people. And certainly, in the course of coming to events in Greece, I know that many of you go back and forth to the UK. And I think it'd be nice to see if anybody here who's in the audience got a question that relates to UK Greece relations. I hope we've got a microphone, but just to give the opportunity to anybody who is doing business or investing in the UK, or any question that you would like to put to our speaker. Don't be shy. No burning questions.
You've let me off. You're a very merciful class.
No burning questions or issues. Okay. I can't see any hands, so I will ask you a final question, which is, back to Greece, really. I'm not sure you talked a lot about the emphasis on strengthening trade relations. Seemed to be a positive momentum there in terms of increasing trade. I guess still from a relatively low base, but it's positive that it's 90%, I think you said, increase in trade over the year-on-year last year. What more do you think, or what do you think would be the one thing that would take things to another level in terms of strengthening those relations between the UK and Greece, both in terms of enhancing trade and investment ties?
I'm going to cheat and mention two things, if I may, which I think are important in terms of UK-Greece. One is in terms of some of the regulatory arrangements. Of course, the overall framework is set by the Trade and Cooperation Agreement, and that's fully understood and respected. There are things that we can do in order to sort of simplify trade between us and, for example, working on recognition of qualifications, which we're working to smooth sort of visa processes. There are elements of what we can do within the construct of the TCA to make trade easier and travel easier in both directions, and I think that is something that is absolutely in our gift and would make a big difference, and something we're working on. I think the sort of second thing, which is maybe a bit more ephemeral, but I think just the overall sort of tone of the debate, particularly in the UK sometimes, on what's sort of happening in trade, and it relates a little back to some of the comments you've made there. Of course, the whole sort of Brexit thing was deeply painful for people in all sorts of directions, both those who supported and wanted things to come out in a different way, those who didn't, and there can be this sort of lingering thing of trying to, I think, replay the debate on Brexit. And I think, A, it doesn't achieve very much, it just sort of opens wounds, but also it can give, I think, an inappropriately negative view of what is happening on trade and happening in our relationship with the EU. I hope I haven't been. I try not to be Panglossian and pretend that everything is perfect. Of course it isn't. Of course there are a whole range of ways in which trade is more difficult now than it used to be, and I think that's just a fact. But in terms of, is there that positive potential? Are we on an upward trajectory? Is there enormous appetite on both sides to see trade and investment grow and flourish? Absolutely. Are we seeing loads of companies exploiting those opportunities, identifying them and doing really well through it? Absolutely. And I think that positive story, without being, I'm not here to sort of bang a particular drum, but I think that positive story about the potential is one that we really could all do more to share.
Okay, well, thanks very much, Chris, for that, I think, positive corrective to, or how we should all be looking at the UK and prospects for increasing trade and investment, in particular with Greece. Really good to hear from you, and hope to see many more UK investors coming to Greece in the coming year, which I'm sure we will, given the momentum in the Greek economy. So thanks very much to the audience for bearing with us through this. And thanks very much to Chris. And that's all from me. Just to say, please enjoy your dinner. Thank you very much for coming. And just finally, I would like to thank our sponsors, without whom it would have been very difficult to put on this event. So I'd like to thank again Attica Bank, Ambient Services, and Hanekian Law Firm as well. Thank you very much indeed. Enjoy your dinner.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being driven by a common purpose. Our mission is to develop the future agents of transformation and change in the Greek corporate community. With a broad portfolio of MBA and MSc programs in a variety of fields and sectors. With an enviable record of employability and placement in senior positions, it's clear that the job market acknowledges Alba graduates as true leaders. So go ahead, live and lead by our values, and future-proof your career.
Everything and nothing has changed. Even if the world feels uncertain, it's reassuring to know things that were important before still matter today. Connecting people, sharing ideas, and solving problems. These things will always be in our DNA. Working across borders, helping to keep doors open, business flowing, and continuing to realize the hopes and ambitions of our customers and colleagues. When you think about it like that, thankfully, not quite everything has changed.
There's a fine line that separates managers from leaders, executives from visionaries, businessmen from pioneers. The same line that separates graduates from Alba graduates. Because here, we believe that true leadership is about being